Welcome back to Markets at Noon, and for now we are being joined by the management of Nisus Finance, a very interesting company where it says that they are specializing in the urban infrastructure finance and the private capital market transaction as well. And we have Mr. Amit Goenka, Chairman and Managing Director of the company with us. So firstly, tell us about your business. Seems like an interesting play. Give us some more highlights, what exactly the company is into.
No, thank you so much, Rishi, for having me here this morning. And it's a pleasure to present about the outlook that we have with our capital pool. Nisus Finance is one of the foremost urban infrastructure finance company, which is headquartered in India. We're also the first listed fund manager out of India, and we've obviously now diversified in the UAE. We believe these two are very high growth markets as far as urban infrastructure growth is concerned, and therefore will require tremendous amount of private capital participation. We become one of the major conduits for that capital, for global and domestic capital, to pool into these high value accretive opportunities and make the best out of them. We run multiple funds therefore to cater to these opportunities. That's obviously one of the largest segments of our work, and related to that, of course, we also provide advice to several asset owners and asset players in how to optimize the opportunity in these markets. So it's a twin model of advisory and asset management.
Right. Hi, Mr. Goenka. Sankita also joining in.
Yes,
and
welcome
to our studio. But you also came out with your numbers, and I see the profit has surged 36%. And
yes.
You also have a target of 4,000 crores worth of AUM for FY26. What are going to be the levers for growth? And can you shed some light, give us some color on going forward? What is going to be your guidance for perhaps in the second half of this year?
So FY25 was a very important year for us. I think this was the pivotal year where we really sort of created a huge paradigm in our favor, where we moved from being a medium player to now becoming one of the foremost formidable players in our space, both in India and the UAE. In fact, our foray into the UAE has been quite unique because we're very uniquely positioned to create a formal fund structure which finances and buys assets, which wasn't really the case. It was largely family office led, unlike in India where we still have a formal investment environment. And of course the consolidation of the market, we've seen players consolidate, big getting bigger, margins expansion. So I think the IPO, which really came out at the end of the last year, provided us that capital. Unfortunately, of course, it was too short a runway for us to make the best of that. We had almost 67 crore rupees of cash out of the 101 crores that we raised sitting on a balance sheet as of March. But it really created the right tailwinds in our favor to now create a very huge decadal growth story for ourselves. So from an outlook perspective, we really just got started. This capital is now getting employed. We've got one of the largest investment banks, Houlihan Lokey, who are raising great amounts of capital for us for our fund pools. We've got significant amount of commitments from global funds. We're talking about a $200 million commitment into that. We've got extraordinary amount of bank support in the UAE, close to about $250 million of loans under closure. So with this capital alone, we'll be able to put roughly about $500 million of committed capital or to be committed capital into the UAE market alone. That itself is about 4,000 plus crores over and above the existing 1,500 crores. So when we talk of a 4,000 crore AUM target, I think it's reasonable given that we do have that capital and the pipeline available for closure in the UAE alone. When I look at India, again, it's a huge opportunity set, right? The AIFs have been growing at breakneck speed of almost 24% year on year. We have close to about 70,000 crores of private capital, which got invested last year, one of the largest FDI inflows in real estate. We saw a very large amount of the funding deficit getting filled in by AIFs and not necessarily banks and NBFCs, given the central bank outlook. So clearly the opportunity is also very favorable for us as an investor in India real estate. Having said that, we will still continue to be slightly cautious. The markets in the last quarter, which is of FY25, took a deep downturn. We saw almost $1 trillion of market cap getting wiped, $15 billion of FI pull out. On the back of that, there was almost a dip of 24% in sales in the last quarter. This quarter also looks very muted. So if you see H1 number expectation, not more than 6-7% growth because of asset price inflation, people being conservative about outlook, about wanting to get into expensive transactions, some fear of inventory overhang coming up. So while of course there's a very large opportunity set, but even if we did 1,000 crores, which is a very small number compared to the demand supply gap, we can move our domestic AUM to over 2,000 crores, our offshore AUM to another 3,000 crores. So as a sum of that, I think 4,000 is a reasonable target for us to achieve in terms of total capital deployed, given that it will still be a fractional amount of the total capital demand. In the UAE, we're talking of almost $350 billion worth of opportunities. In India, we're talking of close to about $100 billion of opportunities. So out of a $450 billion opportunity set, we're talking only 2,500 crores, so it's a very small number. So I think it's achievable. The good part is that there is a continued interest, given that we are now the 4th largest economy in the world, and people have been focusing on India as the new destination for growth. That helps. Of course, factories are getting built, warehousing, data centers, a lot of infra spread across tier 2, tier 3 as well, which is obviously bringing in new opportunities in our favor. So I see this year as effectively the year of the largest impact that we will be able to create for ourselves and our stakeholders, given that now we have the cash to grow, because of which we've got bank sanctions, we've got new investments coming in, we've created licenses in Dubai, in Mauritius, in India, in Gift City. So we have the structures ready, we have the infra ready. We've made those investments. So obviously last quarter we were making investments, shoring up our balance sheet, getting in the talent, creating the right sort of ecosystem for all this capital to walk in, because it's blue-blooded institutional money. They need proper regulated systems in place, which obviously the IPO was all about. So now that we have that going for us, and now capital has obviously started to sort of walk in, this will really be the year of change where we can make that quantum leap in our favor very, very quickly, given that we're very well positioned in our own blue ocean. We have very limited competition in what we do. We do special situations and unique financing solutions in India. We do asset buying in the UAE. And honestly, there's really nobody. We saw one of the biggest sort of change drivers just about less than a fortnight ago, where almost 26 billion dirhams of REIT got listed in the UAE. They've never had REITs in the last 10 years. And suddenly you've got a very large REIT from the government suddenly coming up and opening at 13% premium. So that's the opportunity that is really available for us. And of course, the India opportunity, which continues to grow.
But Mr. Goenka, help us understand that you have two of your key revenue streams, that is the transaction advisory services and fund and asset management. So going ahead, how do you see the mix of both of these two in your overall financials?
A very interesting question. I think both are very correlated. For example, we saw about 400 plus transactions last year in India alone, and we did about 8 of them, right? So a very small percentage of the total pipeline gets converted into actual investments. But then there are the balance about 380, 390 transactions which still need capital and a solution. So we're able to actually convert them into advisory opportunities. But obviously, as the AUM is growing, the shift will largely continue to be on the fund revenues. So last year we were at 30% fund and 70% advisory. This year we're at about 66% advisory and 34% fund. We see that shift continuing with the growth in AUM to maybe 50-50, or 60-40. In this financial year. So as the AUM grows, as we set ourselves to do $1 billion AUM in the next couple of years, obviously that shift of revenue will continue in favor of asset management fees than only advisory fees. And obviously that continues to be a recurring income. That's an annuity, because once you manage a corpus of money, you get your annuity fees, you keep on having those recurring revenues and fees and carry, which is a very large percentage of the balance sheet. So obviously that's something which we're very squarely focused on.
All right, Mr. Goenka, we completely timed out on this one, but thank you so much for taking the time out and joining us and shedding some light on your business and your growth roadmap ahead.
Thank you so much for having me here, and very happy, and all the very best. Thank you.